Good evening. Yeah, that's Jim. That's how Jim gets to the cabin. Is he had to sail up. All right, that's Cuca Lake. That's looking out our front window, our front porch. All right. Okay, here we go, folks. Sorry. Anyways, we're going to do a quick intro here with the breakouts. And gaps are usually part of that process. So when we have big gap breakouts, a lot of people say, well, what do we do from here? Well, what we're looking for is pattern confirmation with gaps, because the trading gap is basically that enthusiasm that is coming into a trade or a trend that tells you there's a drastic change of investor sentiment. Anyways, what we're looking for is that change of investor sentiment. And if we can identify it based upon a pattern, like the slow curve, that tells us we've got potentially more upside. Or if we see the little scoop pattern slow curve, just gives us setup. So I'm going to kind of give you the Cliff Note version tonight. And what I'm going to be working on over the next few weeks is putting each one of these patterns into a well-described, illustrated, either, maybe probably both, a video and or an ebook, depending on which way people like to study it the best. So anytime I see this setup, remember, we're looking at setups that we identify every day, like the bobble. There's the slow curve. There's our doji sandwich telling us we're breaking out. This slow curve, especially when it's got other indicators like breakouts of a 50-day moving average, bobble pattern setup, puts us in situations where we have not only the high probability of being in the right direction, but also a great possibility that we're going to be a big price move. No matter what the resistance level is, if that slow curve breaks out through it, you've got the potential of a pop. Now, the reason I point these out is anytime I can see something that tells me there's a new dynamic and it's confirming a pattern. Remember, if we're coming up to a resistance level, like a big fry pan bottom resistance level, and they break out, what are they telling you about the resistance level? It's not there anymore, and probably if they've gapped through it, that means there's going to be a heck of a lot more upside. And the more pieces of illustration that we can show for the breakout, like at the bottom of the top of a fry pan bottom, a slow curve, and the breakout through the 200-day moving average, just puts us in situations where we can see visually that there is now strong price move potential. Do we always get huge price moves like this on a breakout? Definitely not. But right here gives you such a high probability setup that if you're buying on the basis that two things are going to happen. One, they're going to fail here at the 200, you get out of at the 50, get out of the trade. Or if they go through, you've got the possibility of a strong price move. In this case, a big price move. Again, do we always get big price moves? No, it just puts us in situations where the probabilities are much greater in our favor that not only are we going to be in the right direction at the right time, but we're going to have a high profit trade. So if I see something like this, and we're right at a resistance level, and we've got a strong signal like a doji sandwich, stochastic's not quite in the overbought area yet, I'm buying calls going into the close, because what's going to happen? Next day, if they open it lower and take it down, all right, I've made a small loss. If they pop it, I've got huge gains. So we're looking for breakout gaps, telling us that there's a new dynamic in this trend. So anytime we see that gap up, especially if you see a gap up on a doji, tells you might not want to necessarily buy that day, but if, remember, our simple rule of a doji is they're going to move it in the direction how they open after a doji. Again, just additional pieces of analysis from the candlestick Japanese rice traders telling us what should happen after each signal or pattern. Inverted hammer, gap up, positive open the next day. You want to be buying. Kind of a breakout, and notice where they gapped up. Right here, where you can consider this whole area kind of a resistance level. They gap it up, coming out of a pattern. Probably won't have a high probability that you're going to have a new dynamic. Ted, I usually don't use MACD. Now, I do have MACD on some of the charts only because as a histogram, it doesn't affect anything else. I don't use it as a major indicator, but I use it to add that little extra fluffy that things are moving in the right direction. If it gaps up and the breakout bar becomes red, but still above the T line, how do you trade that? I'll get to that, Steve. That's what we call the message. We'll get to some of those. Again, a breakout, that's when you want to start coming in. Fry pan bottom, slow curve, you start buying on positive trading. Do you use only daily only for these patterns or shorter? If I'm trading soybeans, I'm watching for those pattern setups because, again, with the when you're trading futures, you're going to make money or lose money very quickly. So you definitely want to be finding the patterns that tell you the probabilities of making money are extremely strong. If you can see a resistance level and they gap through it, remember, if you can see it, not to hurt anybody's feelings, but we're not anything special. If we can see it, everybody else can see it. When they gap through that resistance level, especially coming off what we can see is a candlestick bullish pattern setup, you want to be buying. How many days in a row might be a fry pan breakout? How many days in a row might be a fry pan bottom breakout? Joe, I don't understand the question. How many days in a row? Richard, that's up to each individual. If I'm trading, obviously I've got an option trading account. I'll look for which trades look for the best option. If I'm trading in my stock trading account, bigger, more secure type setups, I'm going to be, obviously more of stock trading. So it depends on each signal or each, I would say, trading parameter. But if you're an option trader, so what anybody's percentage doesn't really matter. It's what everybody's comfortable with for their own trading. Joe, fry pan bottom, just all you have to do is see it. You don't have to necessarily have, some fry pan bottoms are 6 months. Some are 10 days. All depends on the looking at the pattern itself. I don't use RSI. I use stochastics, but there's no problem using RSI. My stochastics are 1233. What are your moving day average values? On my charts, the red is the 200-day moving average. There you go. Jim's got it. The blue is the 50. The gray is the 20. And the black line is the T line, the 8 exponential moving average. So when we see a big move like this, what do we expect afterwards? A 45 degree. And how long do we hang on to a 45 degree? As long as it doesn't close below the T line. A breakout, continue to hold until you see the sell signal. So this is what we're kind of expecting after a big price move on a breakout, is a 45 degree, because this is telling us there's been something very dramatic has changed. So anytime we see this type of breakout, we're expecting a move to the next target. And it doesn't matter whether you see this breakout on a 1 minute, 10 minute, daily, weekly, or monthly. It's still, the investor sentiment has changed. So if I'm trading something, I don't even know what this is, but if this was a soybean chart, I'd be buying right here, knowing that it was after the initial 10-minute, they're still buying. This is a 5-minute. You can break it down even smaller. So anytime you see these gap ups, usually means there's a new dynamic in that stock. If you see, this is what we call that little mini scoop. See the flat handle? And then when they break out through a resistance level, obviously we can see this as a resistance level. It means everybody else can. So if it heads up through that level and gaps up through that level, that means this is the scoop pattern reaction, but it's got the slingshot effect coming out the other side. The breakout on the bobble is right here when it comes back up through the resistance level the second time. Or a resistance level with a gap up, and then another gap up. There's the 45 degree. I can probably just zip through some of these. So what I'm trying to illustrate here is a lot of people say, well, shoot, that stock's already up 15%. I don't want to, I'm going to wait for it to pull back so I can get in, which is the absolute wrong method for buying a stock. If it's gapped up and it's pulling back, what you're saying to yourself is, when I buy it on a pullback, as soon as I buy it, it's going to turn around and go back up again. Well, the truth of the matter is, if it gaps up and they're starting to sell it off, that means the sellers are still in there. That's where you don't want to be. You want to wait for the sellers to get out of the trade. So when it gaps up and you have a dark candle, wait to see when the selling stops and then start buying. Where's a breakout on a J-hook pattern? At the resistance level. I think we did that one. Again, that slow curve, doji sandwich breakout. So you see a strong move, expect more upside. See the slow curve, and they break it out through this level, expect more upside. Let's see. This is essentially what we're looking for. Is that new message telling us lots of indecision here, then bam, new decision. There's our little J-hook pattern Morningstar signal. And we traded this one a while back, but I use this as an illustration to say, is every trade you're going to get in at 15 and get out 3 days later at 45? Definitely not. But it puts you in situations where the probabilities of being in those type of trades are greatly improved. So we watch. It's very easy to watch for that big move setup. We can see where the resistance level is, and there's a slow curve. When they broke out, I was breaking out of this pattern and this resistance level. That's where we got our big price moves. If we know what our J-hook patterns look like, wave 1, wave 2, wave 3, breaking out through this resistance level, back up above the T-line, that tells you not only are we in wave 3 with a good probability, but how did wave 3 start? With kind of our best friend gap up signal, telling us there's going to be a lot of force in here. We know how long this should go. Same magnitude as this move right here. Breakout. Now we're watching to see if there's another breakout on this downtrending channel. And where's that breakout likely to occur? When the stochastics get back to the oversold area. A resistance level, we're looking for that wedge breakout. So I'm kind of showing these real quick because this is what we're going to be working on over the next few weeks, so that each person that at night says, I want to find the best trades. I know there's candlestick signals that make good trades. I know there's patterns that make good trades, but what do I look for now to tell me I've got a high probability strong price move? All right, so that was the Cliff Note version. And a lot of people wait for the special after one of these. Well, the special tonight is we're not going to sell you a darn thing. We're just going to keep going. So here we go. Jim, let me bring up the other charts. All right, we're going to kind of go through the other charts fairly quick tonight, and I'm going to do some of the futures right now, and then going to go into, again, the breakout situations that are occurring right now that you might want to take a look at. Jim, tell me when you're ready to go. Are you okay? All right. Let's see. Bob's asking, how do you approach trading stocks around earnings dates? Gaps happen a lot after earnings are announced. The earnings, you got to remember, the only thing that you really need to be concerned about on a candlestick chart is that the graphics are created by the accumulative knowledge of everybody buying and selling during a particular time frame. So if they're buying going into earnings, you've got to factor that there's a lot of people out there that probably know what's going on, a lot closer to the company with a lot more knowledge than what we have. And if they're buying going into earnings, that means the earnings are probably going to be pretty good. Same if they're selling off right before earnings, things aren't going to be good. So we might not know what the earnings are going to be, but the people that do are buying or selling. All we have to do is identify what they're doing. Any reason earnings play breakout should be played any different than any other? Nope. Again, it's the accumulative knowledge of everybody buying and selling. If that earnings has now changed the investor sentiment of investors, that's going to have the same type of reaction. So it doesn't matter what changes that investor sentiment, whether it's earnings, whether it's an announcement they've just hit a new well, or that they've just gotten a drug approved. It doesn't matter what it is that that created those signals. Looking at crude oil right now, as you can see, we're in a slow drift. There's your essential target. I'm going to just show some of the ones that we were trading. Notice the sell signal, bearish Harami, gap down. Then here's your bearish doji sandwich. So today was a good day to be shorting because we knew that if they opened it lower and started trading lower, notice what they did. They came up, failed at the T-line, and started selling off. Did that give us an indication that we might have as a pattern? A bearish doji sandwich. Where's our next likely target? Would be all the way down here. Yes, change of investor sentiment. Doesn't matter what it's created by. We are also trading cattle. And observe the obvious. Where did the sell signal occur? Right smack dab. There was a shooting star, bearish engulfing, smack dab at the 50-day moving average. Where do you think the next likely target is? These are the type of things where got all this on our chart systems. If this was the top, where do you think you can draw your parallel line? Right there. What becomes your next target? This area. Richard, yeah, Jim will tell you when the video will be ready today. Ralph, I don't do too much. I mean, you can use this for Forex, but I would rather trade the index or the currency itself. I'm getting ready to buy the dollar if it comes up through the 200, because what pattern will that be? That'll be your bobble breakout, telling you they're probably at least coming back up to the trend channel. Which means, let's see, I forget what symbol the Japanese yen is on here. That's not it. That's not it. Japanese yen doing a steady uptrend. Do you factor in daily volumes to determine sentiment? No, we're not buying volume, we're buying price. And the way I illustrate that is if somebody really wants to buy something and everybody out there is not willing to sell, that price is going to go up on lower volume. A lot of people say, I want to see volume going up as the price goes up. Volume and price have absolutely nothing to do with each other. We're buying price. Now, the only way that volume becomes a factor to me is I want to know that my universe that I'm trading of stocks has enough volume for me to get in and out of each day, which I use a minimum of 200,000 shares on a daily basis. A candle normally has an upper and lower wick. Do you wait for the wick to form before entering the trade? No, the wick has nothing to do with anything. The wick is just the range of where it's trading. Now, the wick becomes more crucial at the end of the day when it has formed a signal, like a pattern. But whether this is a 1 minute chart, a 5 minute chart, a 10-minute chart, a weekly or monthly chart doesn't really matter. That price movement during the day, where it closes, is the important factor. Joe, yes, sometimes you look at these, somebody was asking today, crude oil. They were asking, why is it 4,500? It's $45. There's a decimal point in here. So today it closed at $45.17. That's hard to do, MB, trading something that does gap up or down. You just have to trade the trend on this one. Linda, a bobble is, I'll come to a bobble here again. Bobble is a J-hook pattern, but you have the added benefit of seeing what, and this was the gold chart, seeing where the sell-off started and where the buying came back in. I'll get to a bobble here pretty quick. But as you can see in gold, it consolidated today. It's off 8 cents, 80 cents, 80 cents so far, but nothing major. Robert, if you buy based on a candlestick buy signal, you sell based on a candlestick sell signal. If you're trading on a whatever time frame. There are times where if the price move is severe, meaning a big, huge price move and you're way above the T-line, then you flip to the 10-minute chart and see when you get a sell signal and a close back below the 10-minute T-line. Yes, that could be consolidation. So you want to watch to see if gold starts trading off tomorrow. But this is just after hours trading. So tomorrow when they open it, we'll see which way they're taking it. But again, you've had dojis in the overbought area a few times. So right now you just have to assume you're in an uptrend until you see a confirmed sell signal and a close back below the T-line. Now, if it confirms, logically that's where it's coming back to is the T-line. Oh, Joe, you trade the ETF because some people just don't like to trade the commodities. And the ETF is usually a little bit slower moving. So it all depends on what you like to do. Now, you probably can't day trade very well an ETF. I'm trying to think of which ETFs. Oil. The oil ETF is at this price, around 580, right there. What did it close? 587. Whereas oil's trading around $45. Let me make sure I got everything here. Okay, so let's go back to gold. To show also the breakout and the breakout. So again, anytime you see these big price moves, it's usually going to have follow through. So if you take that and you're looking at charts, this one had a breakout with the best friend gapping up through the T-line. Again, there's a wave one, wave two. This is what we're looking for, is that gap up going into wave three. You have that also in fry pan bottoms. You can see that fry pan bottom and they start gapping it up. Remember, we're looking at signals when they're in the oversold area, ready for buying. The patterns are usually going to start breaking out when your stochastics are already up in the overbought condition. And the reason you're buying it is because that's where the enthusiasm based upon that investor sentiment buildup is now exploding to the upside. So in the options room today, I think it was somebody was pointing out VEEV, V-E-E-V. So we started buying a call spread on this one because we've only got 5 more days of trading before expiration for July. And it's pretty logical that it could move up into this area based upon this fry pan bottom breakout, that we've got more upside. But to buy the calls for the next 5 days, you got some premium in there. So we were buying the 36s and selling the 38s for 70 cents with the idea that if it gets up to this level in the next 5 days, that 70 cents has now moved to $2 or basically tripled your investment. That was the next one, was we recommended Weibo based upon the positive, let's see, what did we recommended Weibo yesterday? Didn't break out, but today, notice what it did, a little kind of trend kicker. And what's our simple rule of a fry pan bottom? You stay in it as long as it doesn't close below the T-line. Yeah, the sometimes T-Bing is showing that some of these ETFs might have spreads because their volumes might not be great. This is coffee, whereas coffee itself, as far as the July contract, gap down, it might be a short. Where's our first target? Probably right here someplace. So you've got the selling, the gap down, now a left-right combo, and a close below the T-line. Anytime you start closing below the T-line, especially after a sell signal, the probabilities are pretty strong you're going to head in that direction. Our cutes, if I was ready to short live cattle today, but I think it did something like this, if I'm not mistaken. Yeah, popped up. Knew that the overall trend right now was in a downtrend, but it popped up. So where was the best place to set your stop? At the open. Because logic says if they took it up and then they brought it back down through the open, they were selling this thing off, which was what was indicated by the holds chart. If you're analyzing this chart with a bearish engulfing signal, another bearish engulfing signal closed below the T-line, stochastics rolling over, which way should this be moving? It should be moving down. When it's trading positive, not telling you it's doing the right thing, but if it traded positive and then started coming back down, that told you they are moving in the direction that the chart told you it should be moving. So that sometimes is 5 minutes, sometimes an hour. I'm playing more of the chart than the time frame. Breakouts usually occur in the overbought condition in a pattern, not the buy signal is usually in the oversold area. The pattern breakout is usually when it's up in the overbought condition. So remember, just keep that in your head. The signals usually occur in the oversold area. The pattern breakouts usually occur when the stochastics are in the overbought condition. NMK. Another J-hook, fry pan bottom. And notice what happened on this day. Notice where the resistance level is. And the next day they were gapping it up and going in this direction. If they're gapping it up, knowing that this is the possible resistance level, that means they're not too concerned about that resistance level. More than likely, if you see them trading, gapping up and trading positive, heading into resistance, they're going through it because that's, they're not going to be buying enthusiastically knowing that it could top out right here. We recommended BLCM the other day, very simply, because it broke out of our fry pan bottom. And where was the breakout? Right about here at the 200. And what type of signal was it creating? A doji sandwich right at the breakout level. So what do we know about the makeup of a doji sandwich? Simple. We know that it's going to move in the direction of how they open it after a doji. And if we know they're going to move it positive, from here, what's that tell us about our breakout level? They're still moving positive. The breakout level is not a concern anymore. That puts us in a high probability setup that we're going higher. Wave 1, wave 3 should take us up here someplace. CGY, we're making a lot of good money on this one. Somebody was just asking, how long does a fry pan bottom last? It doesn't matter. This one has lasted from end of or beginning of May through June and now into July. And what's the price pattern doing? Broke out through this level. And where were we starting to buy this? This is kind of your bobble. Oh, was it Lori that was asking? A bobble is when they come up and they hit a resistance level. This wasn't quite a bobble. I'll find a bobble before we get done. But then they came back up through this resistance level right at the 50, broke out. That was the first inclination to buy. Then it did a little J-hook pattern. Here was your second area to be buying. So this one's gone from 9 to, I guess it was up as high as 16.5 over the last 2 or 3 weeks. Is that unusual? Definitely not. It's still identifying the patterns that are putting us in the right place. Momo just broke out. One to keep an eye on. ACHN, another big breakout. Where is it likely to move? Well, supported here. Probably going to go to the top of the trend channel. Is that worthwhile? That's going to be about a 15% upside potential. NVDA, another one. Kind of a little scoop type pattern. Notice what they did today. They gapped it up, knowing that their resistance level was right here and went through that. What's that tell us? There's probably a lot more upside. Maybe wave 1, wave 2, going into wave 3. Costco had a big breakout today. tells us we're probably going to be in a 45-degree off of here. So if you like trading the big ones with options, probably got a 45-degree high probability trade setup. What was our other one? I will think of it. Oh, I think there's that fry pan bottom. There's the breakout. There's a steady 45 degree. This is what we expect after a big move, is that 45 degree. RNG gapped up today. What's our trade analysis on this? It's going to move in the direction of how they open it after a doji. So positive open tomorrow, you can start buying immediately. Whose hand, right? GMO, another J-hook pattern breakout, left-right combo, gap up through this area, tells us wave one, excuse me, wave one, wave two, going into wave three should be the same magnitude, which is about 10 points, should take you up into about the $48 range. And HZNP, left-right combo, gap up through the resistance level of the 200. I'd be a buyer of this one on positive trading tomorrow. Tell me I've got wave one, wave two. Wave three started with your doji gap up, and now they've gapped up through the resistance level. You should be heading for the $21, $22 range. For Costco, would you expect the price to come back to the middle of the big breakout candle? Where do you buy in? No, I wouldn't want to see it come back to that level. I would suspect it's going to trade. What I would do right now is sometimes they'll open it and trade it down, and then it comes back up. I put my buy stop at the previous day's close. If it comes up through there, the profit taking's over. So I would be buying this on any positive trading tomorrow, expecting a 45 degree. Lumber liquidators, another gap up after a bullish engulfing into the resistance area. Tells me this is probably going higher. Where did it close today? Right about the same place it closed the last 3 times, but with a buy signal. If this opens positive, J-hook pattern is in progress. On CLF, yes, you've still got an uptrend, but you're not quite into what I would say the overbought condition. So right now, all you can do is assume that your uptrend is in progress until you see a confirmed sell signal. Is it too late for WB? No, this is the signal. This is telling you they've broken out. You're probably still going to have a lot more upside. So I'd be buying this one with the expectation you're going to be in a 45 degree. And let me see what else we got. MTZ. Another gap up right to the resistance level. If this opens positive, telling you the resistance level is not in effect anymore. These are what we call the messages. When they gap up and pull back, that doesn't look great, but you got to remember what the message was. The message was they gapped up with great enthusiasm. Now there's profit taking. So what's the strategy? You just wait to see the next bullish candle to tell you that the profit taking's over. Ron, what actually constitutes a breakout? Something that tells you there's been a resistance level or a new dynamic in the in the trend. Is it a gap or a higher high in certain time frames or a major price move? Just that breakout telling you something has broken out to the upside. So all we're looking for, again, our breakout is still a function of what type of signal do we have. There's a little inverted hammer gap up coming out of the oversold area. Oh, I don't know how to get sugar futures, SBAU6. What's that? Sugar. Doji. Now you're trading back below. I'd look to see whether it's coming down here and or the 50-day moving average. Yep, you should get a recording. TTCT. This to me constitutes a breakout. Now where's my next target? I want to see it get through this resistance level. You can see it's sideways, but how are we getting there? We're getting there with a bullish engulfing gap up. So there's a lot more energy in this one right now. This one was to illustrate how we broke out through the 200. Now we've broken out through this downtrending channel. I'm going to sneeze. Must be all the darn spiders that are biting me. Okay. So anyways, that's going to be our kind of our directive here for the next few weeks. And that information is going to be pretty well solidified for those of you coming to the lake for the private training session. That's going to go into our kind of our quantified approach of which ones are the best ones to go after. K. Farah, I would be buying this one on positive trading. Then I'd just be very conscious of what happens once it gets up here. Hold on to your individual stock selections. We'll try to do some tonight, probably just one per person, so we can get through them fairly quick because we're already getting close to time. So again, any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.8 seconds, do the second double line. Okay, we already did AVXL. That was a breakout of this level. I'd still be looking to buy this one based on here's the first target. Can't draw a straight line. You can right up through the tops here. ARLP. That one, now you have to see it open positive. If it opens lower tomorrow, it's coming back to test the T-line, which tells you today they closed more than halfway down this candle. If you didn't close it out today, get ready to close it out on weaker trading because that puts you right back into the trading range. This should have been a breakout. But if it opens positive, it better start trading positive immediately to stay in it. DPT, Al Pashaw. You can stay long on this one. It pays about an 8% dividend plus heading up. So even if it moved up here, another, that's going to be about 25% to the upside plus an 8% dividend, good overall return. Blue, Stay long on this one. Now what you're looking for is a positive open that breaks you out through this whole downtrending channel, making the 200 your target. Pepsi, if you like Pepsi, we mentioned this today, that you can stay long on this one. It's just not going to produce a whole big, huge percentage return because of the institutional type trading on it. Whiting needs to get back up above the T-line right now. I'd be watching for a reversal because you're in the oversold area. But I wouldn't be buying it until I see a buy signal and a close back up above the T-line. There was a left-right combo on FIT. I had this one written down. Here's a so I'd be a buyer of this one. Just watch what it does once it gets to the 50, and then it should get back up into the handle here. A couple other ones that I wrote down that look good. PBYI. Another one that's setting up nicely with a bullish engulfing. Broke this downtrending channel with a little gap up through the 50. I'd be buying this one on a perspective of wave 1, wave 3, bringing you up into this range. And form J-hook pattern, left-right combo. If it opens positive, you're in wave 3. I'm still keeping an eye out for a bobble. As soon as I find one, I'll point it out. Oh, I know a bobble. Kroger, I wouldn't be trading. This just isn't a very dynamic chart right now, and I know the reason that people are looking to get back into Kroger is because of its previous history on this move right here, which was substantial. But you can see where you are now. You're just in a junky sideways. And what a lot of people don't remember or don't realize is you can make a lot of money in a stock, and then it gets to a more mature stage, and everybody hangs on to it because it's their friend. It's made them a lot of money. Got to remember, prices go in cycles. I had when I was a stockbroker, one of my friends and clients had Walmart in their portfolio, and they wouldn't sell it through hell or high water because they'd made so much money with it. Yet Walmart at that point wasn't going anywhere, but they didn't want to sell it because it became such a good feeling for them to have Walmart in their portfolio. CYBR, another return after the hard sell-off, coming back up. You stay long. You just obviously watch to see if they can get up above this level. If they start selling it off, it means they failed up here. It's pulling back. You might take a little bit off the table. And WC is not found. AMBA we recommended this morning because of the bullish engulfing. Bigger. Still wouldn't be afraid to be buying AMBA because you've got the fry pan bottom classic J-hook pattern in progress. Amazon, just stay long. This is a very good looking chart in the sense that came up, went sideways to where? Right to the 50-day moving average, then you had your best friend signal, doji gap up. So you stay long on this as long as it doesn't close back below the T-line. Oh, we did form. There, yeah, form is one that I like, J-hook pattern. Caesars, nothing here yet. If you're short, you stay short. But right now, after a doji and a little positive move, put your buy stop just above. If you're short, put your buy stop just above today's high. It shouldn't move in that direction. The reason I'd be suspicious of it moving in that direction is, number one, you're in the oversold area, and two, look how far away you are from the T-line. Wouldn't be surprised to see a little bit of a bounce in here. Dust. Just might have a little bit of a bounce, which means gold might have a little bit of a pullback, just being the short fund. So unfortunately, this is tough to trade because of the gaps one way or the other on the opens. But I'd be watching gold to see what it does on the open. See, it's still selling off, which doesn't necessarily mean it's backing off. All it might be doing is consolidating, waiting for the T-line to catch up a little bit. Did I do blue? I think I did blue. Blue? Well, maybe not. You want to be buying this one on positive trading tomorrow. Cyber, same thing. AUY, stay long as it doesn't close below the T-line. Now, for profit-taking purposes, with it trading back below today's low on the open, probably wanted to take profits. You can always buy it back if it comes back up through that level. FSM, we recommended this one because of the breakout. There's a doji sandwich breakout. You just stay long. EDD, this is a little bit of a bobble here. Notice it came up and hit the 50, pulled back, and notice what they couldn't do. They couldn't close it below the T-line, which means if they open this positive tomorrow, you can be buying immediately because now you have that J-hook pattern, which is more illustrated by the fact that it sold off at the resistance level. Same scenario on Apple. Notice Apple came up, failed at the 50, pulled back. They haven't been able to close it below the T-line. Now they did a doji right here on the 50. Makes it very simple. If it opens positive tomorrow, your doji sandwich is confirming your bobble breakout. DLTH, nothing here that would get you real excited unless it breaks this downtrending channel. Just I'd be more interested if it broke the downtrend. CWTI, inverse of crude. You could be still buying this one, but I would suspect you're right here at a resistance level, and you're also right here at a basic near the 200, which might act as a support level. So you just kind of have to watch this resistance area or support area. CLDX, stay long as it stays above the T-line, but notice your stochastics are getting toward the overbought area, so you're getting up toward this congestion area. Facebook, I've never really had any great desire to trade this one. Notice what it did today, a bearish harami right here at the 50 with stochastics just getting up into the overbought area. If they open it lower, it still tells you this downtrending channel is in effect. So we did Apple. XIV, another one that's getting right here near the breakout level. Stochastics still have a lot of juice left in them. I'd stay long, but right at this point, I would use the T-line, which is basically today's low, as my stop. Alamo Gold consolidated, kind of did almost kind of the same pattern as gold did itself. August Gold, kind of consolidated here today. DBA, the Ag Fund, probably heading for the 200-day moving average. Silver was backing off a little bit today. So where's the next likely target? Probably coming back down to test the T-line area. And Guild, you can stay long on this one. It's not a very exciting stock right now. but if you're staying with it, don't let it close back below the T-line. And if energy transfer, still very slow uptrend and you're at the top of the trend channel. If you like it, don't let it close below the T-line. GBT, you can be buying this one on positive trading. As long as it stays above the T-line, you can kind of see the little stutter step in here. The pullback wasn't very aggressive. Deutsche Bank, just stay short on this one. It's hard to trade because of the trading overseas, but right now you want to be staying with the downtrend. AutoZone, probably coming back. Notice the shooting star confirmed in the overbought area, at least the first target. So if I own this one, I would have been out of it today with the anticipation they are coming back to test the T-line, but we don't know whether it's going to support there or not. Did Amazon, did Nugget, STX. Another one that is set up very nicely. You've got the piercing signal, belt hold type signal. If it trades back up through this level, you want to be buying aggressively. Now you have wave 1, wave 2, heading into wave 3. Corn, as far as the fund, still didn't do anything of any great consequence today. So if you're short, you stay short. And corn itself did a little bit of an inverted hammer today in the oversold area. Remember what our analysis is of an inverted hammer. If it opens positive, the probabilities are 95% or greater that it's going to start moving positive. Micron, nothing yet until it's just a junky chart. I wouldn't do anything with this until it can get back up above the T-line. Western Digital popped up today. I'd be ready to buy this one, especially if it came back up through today's open. It would be telling us that that gap up today is still working. Coffee, again, still heading down. The 10-year notes, still moving up in this slow uptrend. The yields are just dramatically low. But right now, they're still buying the 10-year notes. And VRX, get ready for a doji sandwich. If they open this positive tomorrow and they do a doji sandwich, same magnitude as this, then just watch to start taking profits when it hits the 200. I'm sorry, the 50. Oh, AV, all I can tell you is, again, being an ADR, just stay short. Netflix is dead in the water for right now. When it gapped down below yesterday's low yesterday, telling us there's no energy here. I wouldn't be long or short Netflix right now. AGN, slow, steady uptrend. You can stay with this one. Dividend on BPT is 16.3, but I think, if I'm not mistaken, that BPT is kind of a self-liquidating process, that it's the return of capital as well as dividend return. Salesforce, another one that I wouldn't be long or short, just not enough direction right there. ART, just stay long on this one. Not a very exciting chart, but as long as it stays above the T-line. The T-line is the 8 exponential moving average. Very simple rule. If you see a candlestick buy signal, you can stay long until you see a candlestick sell signal, and a close back below the T-line. The moving averages is the 200, the 50, and the 20. Simple moving averages. That's on every major money manager in the world has those on their charts, and that's how they make their decisions of when to buy and sell at those support and resistance levels. We have the benefit of being able to see exactly what investor sentiment is doing at those levels immediately. CHY, not a real exciting chart, but if it opens positive tomorrow, you've got a doji sandwich. You just have to make sure it breaks out through this level and then should be heading for the 50-day moving average. ALKS, there's a fry pan bottom. You stay long on this. Just watch to see what it does at the 200. First Solar. Kicker signal to the downside. I'd be ready to short this one on any weakness tomorrow because it's more than likely coming down into that trend channel, taking you down into the, say, the $35, $37 area. Remember, anytime you see a kicker signal, that is the strongest of all the signals. When they kick it in the opposite direction, tells you there's going to be more downside. Las Vegas Sands, nothing here to get excited about. You can see there's really no direction. I would be trading someplace else. JNUG is backing and filling with gold, but it hasn't done a sell signal. It just tells me it's going to do some backing and filling before heading back up. Morgan Stanley, nothing here to get excited about either. That's a sideways chart. And PTCT, I think we did. This one you can be buying, especially if it heads up to this area. Now, this did the message, gap up, pullback. So what you're waiting for right now is seeing when the profit taking is over and the buying starts, because if when the buying starts, and you've already got the message, they were coming into it with great strength, and then there was some profit taking. UNG, it has to open positive and trade positive tomorrow. You've got a bearish engulfing signal. If it opens lower, take your profits, because it's probably coming back into this area somewhere. The T-line is the black line, yes. The T-line is the 8 exponential moving average. Very simple rule. If you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close back below the T-line. You'll see lots of times where there's a sell signal, but if it doesn't confirm by closing below the T-line, you stay with the trend. EROS, stay long on this one. Little J-hook Morningstar signal. Chipotle, you want to see a kicker signal as, you know, the bigger the bodies, the more compelling that there's been a change of investor sentiment. Sometimes you see a little kicker type signal with small bodies. It's just not as powerful. Chipotle, you can get ready to short this one. If I was going to short it, I'd put a sell stop just below today's low. That would tell me that this support level is not acting as support, but now you've got wave 1, wave 2, wave 3 in process. Did I do EROS? Yes. INVN. INVN, I wouldn't be long or short. See if I can make it more. No, there's just nothing here. You're in a sideways mode. You're still below the T-line. Couldn't get up through that today. I probably wouldn't pay attention until it gets up through the 50-day moving average. What makes a kicker signal? It's usually when there's a news item or something that creates, and the kicker signal is where you have a bullish candle. The next day they open it at or below the previous day's open and goes the opposite direction, going to have some strong downside. Same thing right here. Moving in this direction, they opened it at the previous day's open and went the opposite direction. That one's going to be on the recommended list to go short tomorrow. Let's see, BPT dividend, is it 1.66%? All right. Yeah, I think some of the dividends coming out of BPT is equity redistribution. Dollar Tree still in the 45 degree. You stay with it as long as it stays above the T line. And is that a symbol O? There's a perfect example that if you're moving up, you're in the overbought condition, and you see a doji, simply put your stop at the previous day's low, because if it comes down through there, where do you think it's heading to? Right back to the T line. No. The kicker signal, the question is, does the kicker signal have to have the day's candle on opposite sides of the T line? No, the kicker signal is so strong that you disregard anything else. Stochastics, where it is in the trend. Anytime you see a kicker signal, it tells you there's been a dramatic change of investor sentiment. There's probably going to be more following after that. Good. We finally got the audio figured out. Soda, this one you can get ready to buy if it opens positive, breaking out into new territory. Realty income. So, yeah, if you took profits, I wouldn't, if it's a REIT or pays a dividend, you probably should be trading this more as a longer term hold instead of a trader, even though some of these REITs are starting to pick up a lot of strength. Usually you hang on to them because of the dividend yield. Data, nothing here yet until you see something break out to the upside. Okay, last two. And did I get a good explanation of the bobble? We've got a video on the bobble somewhere. XGTI, nothing yet. It's not quite a reversal signal because it's not quite a bullish engulfing. So I'd probably be trading something else. Even though there's some charts that look like they're going to start heading up, I want to go with the ones that are actual signals. Now this is more of an actual signal because of the doji gap up. You just have to make sure they trade quite a few million shares of this each day as a $36 stock. Oh, when I went to the doctor today, he said that, which was just a follow-up, and I knew what he was going to say. Yep, that was a spider bite. Looks good. It's all healed up. So I had to go because I've got Nurse Cratchit here that says I have to go check things up. DMP wouldn't be long or short. That's about as sideways. That's about as sideways as you can get. Okay, guess we'll call it a night. We've got, I think, one more spot left at the private trading sessions at Cuca Lake for the second session, which is August 9th to August 12th. That's somewhat of a bobble coming up through, and as I say, I think Apple was more of a illustration of a bobble where it hit the 50, pulled back. Now if it gets up through the 50, the bobble is in place. All right, Richard. Yep. So, if you're thinking of it coming to the lake, all you have to do is bring your bathing suit, your flip-flops. That's all you need. We take care of the food for you, breakfast, lunch, and dinner, and snacks, and everybody stays right there at the house. So you get a full weekend of investment information. All right, everybody, have a good summer evening. We will see you bright and early tomorrow morning. It doesn't matter where the bobble occurs, just as long as they hit a resistance level, pulled back to the T-line, and came back up through the resistance level. All right, everybody, have a good evening. We will see you bright and early tomorrow.